A very warm welcome. Please be seated to this panel on the digital euro. My name is Dirk Niepelt. I'm heading the CEPR's RPN on Fintech and digital currencies. And we want to think a little bit about the digital euro in this hour and about the prospects the digital euro project has. We have four excellent panelists here. To my right, starting right here, we have Katrin Assenmacher, then we have Peter Bofinger, Rod Garratt, and Alexandre Stervinou. Katrin is the head of the stress test modeling division at the ECB. Since a few days ago, she actually held a different role for the last 8 or 9 years. She was heading the monetary policy strategy division at the ECB. She held a similar position at the Swiss National Bank previously, and her background is in time series econometrics and monetary policy. Peter Bofinger is professor in Würzburg in Germany, and he was a member of the Council of Economic Experts of the German government for many years. He consulted also with various organizations, institutions, and his background is on monetary international economics. He has been a critical voice on the digital euro project. Then we have Rod Garratt over there. He is professor at UC Santa Barbara, currently on leave as a senior advisor at the BIS. He has consulted with many institutions, including the Federal Reserve Bank New York, the Bank of England, etc., etc. And his research is on financial markets and payment systems. And finally, we have Alexandre Stervinou, director in the Cash and Retail Payments Policy and Oversight Directorate at Banque de France. In this capacity, covering, among other things, the digital euro project. He has held other roles at the Banque de France before, and actually also has been with the Financial Stability Board and has also a background in the private sector in financial services and telecoms. So we have four people who have thought a lot about the digital euro project. The plan is basically to have maybe 3 rounds of questions, and then we'll open up to the audience. I guess that you will also have some questions to the panelists. I would start with Katrin and ask her to tell us a little bit about the main motivations from the ECB side for the digital euro project.
Yeah, thank you, Dirk. Thanks to CEPR for inviting me to this panel. And as a central banker, I of course first say these are my own views. And I would also like to say that I'm not a part of the digital euro project, so all questions on the design and technical details of the digital euro I will reflect to Alexandre. So the way we pay is becoming increasingly digital. So we therefore need also digital money. But today digital money is supplied only to the general public by private providers. So the central bank does create digital money, but this is only accessible to banks, not to citizens. So citizens nowadays can hold physical central bank money, that's banknotes and coins, but no digital central bank money. So with the growing importance of the digital economy, our currency also has to evolve. To be prepared for the future, our money needs to fit with people's payment preferences. In other words, we need a pan-European payment scheme that provides safe, fast, and equal access to payments to everybody all across the euro area. It has turned out that the private sector is not able to do that. So this is shown by the European Payment Initiative, which more than a year ago, half of the banks pulled out, and these banks were backing this initiative. So the aim of this European Payment Initiative was to offer digital wallets, card payments, and peer-to-peer payments to consumers in the euro area, but this initiative has to be considered to have failed. At the same time, big tech firms are moving into the payment markets. These firms have a global reach. They have a lot of information about the preferences of the users, and having also payment information is very valuable to these firms. So they could better bundle and market their digital products. And in such a scenario, a digital euro, so a digital central bank money, ensures privacy protection and inclusion. So the digital euro will be designed in a way where consumers disclose the same information as nowadays only to their bank, and the central bank will not have a commercial interest in this information and will also not be able to see the payment information. So overall, these are aims, objectives of the digital euro that will make the euro fit for the future in a digital world.
So Katrin, thanks. You mentioned a couple of things that we'll come to later. Private sector failure you described. You mentioned the privacy issues in the discussion. Let me ask Alexandre, is this a view that the national central banks share basically, or would you feel that maybe from the Banque de France perspective things are a little bit different, the sort of special issues that you would emphasize a bit more or less?
So thankfully we do, and I do share exactly what Katrin said, which means that we are in that project involved in a very consensual way. Just to really set the scene properly, this is a project which has been a Eurosystem project from the start. In the last 2 years, we've been through an investigation phase where all the national central banks and the ECB together tried to go down on the gory details of what a digital euro could be, how it could shape up, and also to try to answer some of the trends that we've seen actually. But obviously this is not the end of the debate. Let me maybe focus on one or two little things on top of what Katrin said. The first one is indeed strategic independence. I mean, that is something Katrin highlighted, which is one of the key drivers regarding the digital euro. We've been and we are in a public-private partnership when it comes to payments. That has been the case for centuries actually, and that is still the case, and that will be the case tomorrow. So there is no way that we are changing this with something called the digital euro or whatever else. So there will be always a two-tier system here in place, and we may come back to that, at some point. But I think what Katrin underlined as trends in the digital space are raising really the question for central banks to be in that space also. We are not, we are in the physical world. We are building that trust in the physical world with cash. Tomorrow, I mean, being in the digital space is a key question to ask. And that is bridging, some things also, let's say, with that strategic independence that we sometimes talk about. We in Europe are mostly dependent on external foreign actors in the private sector coming from outside Europe when it comes to payment. Tomorrow, if we want a level playing field in that space, asking ourselves to have something like the digital euro is maybe the best answer to ask ourselves those days. So I think strategic independence is one key driver to have in mind. Then, in those considerations that we brought forward, I think we have always to distinguish, to which stakeholder, to which category of stakeholder we are talking to. And we have different objectives and different answers depending on that category. You do not talk the same to the banks as you talk to the consumers, as you talk to the merchants. If we take the banks, I think, the main concerns are indeed this two-tier system I was talking about. Let's reassure everyone, I mean, there's going to be a two-tier system in place also with the digital euro. And we may come back to that again for, the fears that the commercial banks may have. When you talk to consumers, you have to consider key characteristics of actually what cash is about and how to bring that in the digital space. And I think those considerations are mainly threefold. The first one is privacy. And I know this is raising also questions. But what we are trying to do here is to provide maximum confidentiality when it comes to a digital euro offer in the future. So we have to be transparent as central banks. We have to design things properly to make them open to the wider public and also to the stakeholders to understand that privacy is a key driver of that digital euro offer, a driver that is not currently available from private sector players, or at least most of them. Second one is legal tender. Legal tender is a key characteristic of cash, and that allows it, to be widely available everywhere. I know there are a few questions on that, and that is not exactly the case in all countries in Europe, but that will be solved also with a legal proposal that the Commission has made back in June. So anyway, legal tender allows you to not refuse, to have a merchant not refuse that payment means as a way to transact. And actually that's a very important topic to consider, because this is not the situation you can face, with merchants, either with payment cards or other payment means. And maybe the last one is all about actually, the safety, the trust that this type of payment means can bring, and the fact that it will be free for consumers, also drawing a parallel with cash. Now, I mean, moving to the last space, the merchants. I mean, the merchants, they have an interest here only if they see additional, let's say, profit and less loss. I mean, that's as simple as that. They are, businesses, so they have to consider what is their own interest from a business model perspective. And I think on that also, I mean, this is an open question on how to design something that will be good, basically, for the merchants. And we are still, in that debate. Let me just finish by saying, with this introduction, that actually we are opening the debate. It's a public debate. That's why there is this legal text that will be discussed, that is being discussed between member states and with parliamentary members at European and also at national level. And it's a fair debate to have. It's not something that the central banks are pushing forward unilaterally. That's absolutely not the case. We have done our bit. We are still carrying on with our bits. And our bits are more on the architecture, the design, and saying if the wider public, if the politicians want something like this, here is the way we can do it and we can best achieve it, in the near future.
Thank you, Alexandre. I think it's interesting that you're emphasizing the commitment to the status quo two-tier monetary architecture, right? To me, it would seem that this is something to be discussed now, given that we have this opportunity. But I'm not a panelist. Let me move to Peter. Peter, you've been sort of a critical observer of that project. We have heard a couple of arguments that apparently motivate the project. I understand you're not convinced. Can you tell us a bit more about why you see or don't see market failure, and in particular a need to intervene with the digital euro?
Yeah, thank you very much for inviting me to this panel. What is the digital euro all about? It's about the division of labor between the central bank and commercial banks. So far, we have a clear division of labor in the supply of money to the private sector, private non-bank sector. The physical money comes from the central bank, and the digital money comes from commercial banks. This is a very clear division of labor. With the digital euro, the central banks start as suppliers of digital money too. So there is now competition between the central bank and commercial banks. And if the state enters the sphere of private business, what is required as a justification is a market failure. And the question is, where is the market failure that justifies such a fundamental change in the division of labor between central bank and private banks, and also private payment service providers? So what I think is not so clear is digitalization by itself is not a justification for digital euro, because everything is digital so far, and digital since decades, and our money is digital. So sometimes you hear people talking about the digital euro as digital currencies and all that stuff. All our currencies are digital since decades. Of course, we have cash, but the monetary system is digital. And so the digital age, or embracing the digital age, as ECB said, is not a justification for digital euro. So then the question is, what is the use case for the digital euro? And there are two forms how the digital euro would be organized: the online version and the offline version. The online version means you open up a parallel account with your commercial bank, which is now in digital euros. So your commercial bank is just administrating your account, but it's so to say, it's a liability of the ECB. So what is the use case for having parallel accounts in digital euros, which are limited to 3,000 euros? I don't see any use case for this. It just means a duplication of the accounts in the euro area, and it makes everything much more complicated. Yeah, because, and I don't want to talk about these waterfall models, and it means if you're really having transactions with the digital euro accounts, it means that for one transaction that you have now, you would have up to three transactions with the digital euro. So it makes the whole payment system much more complicated. I cannot see how this will make the whole thing cheaper. Then you have the offline version, which is a kind of digital cash. And I don't see many advantages of digital cash, and the people who are using cash appreciate cash because it's physical and not digital. And so I don't see why it makes sense to transfer money from your bank account to kind of digital wallet on your smartphone. I don't see the advantage. Then, of course, one can say we have a systemic problem, and that was raised, that payment systems in Europe are dominated by US payment service providers. This is true. And this could be also a market failure, because these are platforms, and it's difficult for private suppliers to get into that market. But the fascinating thing, the ECB says nothing of how this payment system should be organized. The ECB says, yes, here are the accounts, but how will be the transactions made between these accounts? The ECB says nothing about that. They say, this is something the private sector has to offer. So this is really a blank space in the whole thing. And so you can say you have an architecture, but you don't have the plan how the building will be constructed, because that is really, it's essential to have payment system, but the systemic aspect is not discussed by the ECB. They say this is just for the private payment service providers. And this leads to what Katrin says. The European Payment Initiative is not a bad thing, and I don't see it dead. It has gained momentum. They will be able to provide P2P payments next year, and even if it does not really work, it would be worthwhile for the central bank to promote this process, to help to shape such a system. And we know from many countries that it's possible with effective payment systems. You can control, can keep the growth and dominance of US payments service providers under control. A very good example is Switzerland with a twin system. It's an ideal system, and I think people also speak about to twin, so it has just become in the vocabulary, and it works nicely. And I think this kind of system is what we need, QR-based systems. You can see it in Brazil, the PIC system, you can see it all over Asia. And the role of the central bank in these countries is that they orchestrate such systems. And what is important for such systems, you don't need a digital euro or digital central bank digital. It's absolutely useless. So if you really want to do something about the dominance of US platforms, just promote such systems. They are based on existing structures. They don't need parallel accounts, and they can be realized very fast. Yeah? And even if European Payments Initiative is not working well, then as a CEPR, as a central bank, you should just promote it. And thank you.
Thank you, Peter. Rod, I saw you smile a little bit when Peter mentioned the waterfall model. The waterfall means that since the ECB plans envision that citizens could hold up to 3,000 digital euros, but they might be able to transfer amounts much larger than that. So you could basically convert your deposits into digital euros. The amount would be transferred in the form of digital euros and then would be reconverted back into deposits at the receiver commercial bank. That's, I think.
There are two waterfalls. So if you want to make a payment with your digital euro and you don't have enough digital euros, so there are two waterfalls, which makes it quite nice. So that if you want to make a payment with your digital euro account, you do not have enough digital euros on your money, then the waterfall, the reverse waterfall, the waterfall takes money from your bank account to the digital euro account. That's one waterfall. And if you have money on your digital euro account and someone transfers money on this account and then the account is above 3,000, then comes the reverse waterfall taking down. So there are two waterfalls, and that makes it 3 transactions instead of 1.
So Rod, you smiled a bit about when you heard that, but more generally, what is your take after listening to those 3 panelists? Does Europe need a new form of public money?
Yeah, thank you. So thank you for inviting me to join this panel, and I should give the disclaimer that these are my views and not necessarily those of the BIS's. So I guess, like, need is a strong word, right? Because need suggests necessary, and I'm not sure it's necessary, but excuse me, we can think about the ways in which it might be beneficial. And if you look at some of the objectives that have been stated in the reports that have been put out about the digital euro, they talk about things like defending the euro against private commercial currencies, like in particular things like stable coins. And that may be something that we need to worry about, but it's not entirely clear that that can't be done through adding functionality to deposits. So that isn't in itself a necessary reason. There's also this idea of preserving the monetary anchor if cash disappears. And that I find to be a little bit vague. It's not entirely clear to me that that's necessary either. So what I'll pivot to is what I think is the most promising aspect, which is improving payments. And I'll say a few things which may sound like I'm agreeing with Alexandre, But then I'll make a little bit of a turn.
But you're not.
Which will end up being more positive, ending on a more positive note. So it is true that we have systems like Twint in Switzerland and Swish in Sweden. And so there are systems that have been developed within countries that facilitate easy person-to-person, for example, payments. In terms of commercial bank deposits, is it as easy to do that across the entire euro area? That's a question. So there are opportunities to improve the way people make payments across the entire euro area. Now, are those issues having to do with the currency unit or with the payment rails? That's something I think Alexandre is saying, and I kind of agree with that. It's not entirely clear, and the digital euro proposal isn't all that clear exactly on how it's going to achieve many of the objectives which it outlines in terms of having instant, accessible, low-cost payments that can be made anywhere in the euro area and possibly beyond. So I think that's a very difficult one because the objectives in terms of improving payments are quite clear, but whether or not it's essential to have the digital euro to achieve those objectives is not so clear. But I will move on, though, to what I think is in some ways a missed opportunity when we think about the digital euro. Most payments nowadays are digital. And the key implication of that, from my perspective, is that there's a loss of consumer privacy. There's no way to protect your privacy when you pay digitally. Now, the digital euro addresses this, but does it address it in a way that meets the underlying objective of allowing people to pay privately when they pay digitally? So the digital euro has two schemes of paying. One is the offline scheme, and the offline scheme is designed so that it can essentially provide full privacy, a highest level of privacy. But that is only allowed when it's what I guess is called a proximity payment, or when it's a payment that's direct from one person to another. Well, we already have cash for that. So it's not so clear to me that that's a huge advantage. When we move to making digital payments, well, now remember that the digital euro is a liability of the central bank, but the users contract with PSPs. They don't contract with the ECB or with the central banks. They contract with the payment service provider. So the level of privacy they're going to have with the digital euro is really no different than the level of privacy they have with current commercial bank transactions. In fact, you could argue there's less privacy because the data not only is going to the PSP, but it has to go, granted in an anonymized form, somehow up towards the central bank. So the central bank, in some ways, has access to the data. Now, again, there are promises about privacy in terms of that the central bank can't see individual identities and so on, but that data is still being relayed. So if you think about the sense in which is it more private than commercial bank deposits, the answer is no, it's strictly less private. So what's the real answer? Well, let's go back to 2018. Christine Lagarde, when she was the managing director of the IMF, said, central banks can provide one thing that commercial banks cannot, privacy in payments. But that requires the central bank to take an active role in facilitating the payments. And so what I think is the missed opportunity in the context of the digital euro is the idea that they're offloading all of the responsibilities of the payment service provider to private entities. And so I think to really obtain privacy and get what would, I think, be a key benefit of the digital euro, it has to be administered by the central bank. Now, I'm not forgetting about social concerns, AML and all that sort of stuff. The data is still collected by the private bank using systems much like the euro describes in terms of the data being anonymized. But the commercial bank or the central bank does not have an incentive to do anything with that data, and that's the key aspect. So I'll stop there.
So do you maybe want to continue right away and tell us a little bit about how you would suggest the project should look like in order to strengthen this privacy dimension? Maybe
yeah, so
briefly we have to speed up to get...
Oh, yes. Sorry. Yeah, so that's difficult. I'll just say two things. Once privacy is it's difficult to gain trust in privacy, for people to believe in privacy. So to do that, however it's done, it has to be simple and understandable. People have to believe it. So when I hear things about zero knowledge proofs and so on, I always think, well, I don't know if the average person is going to really accept that. But the idea of having the data anonymized and not accessible to the central bank, I think that can be done credibly. But the other key aspect is that this distinction I would make between won't and can't. Saying that you won't look at the data is only something that applies today. It doesn't necessarily apply to the future or to future administrations. So as much as possible, it has to be, the case has to be made that the central bank can't look at the data.
Alexandre, seems to me that it's going to be hard to convince citizens to adopt the digital euro. Will not pay interest, 3,000 euro cap, privacy questions. Nobody really cares about the distinction between central bank money and commercial bank money. What do you think people would adopt it, and what can be done for people to adopt it? And also, please, a brief answer if possible.
Trying to be brief, but there are so many things to say. Again, it's not going to be the end of the debate, I think, with all of us. First thing, maybe freedom of choice. When it comes to payments, that's something which is paramount. As a central bank, we are here also to ensure that there is freedom of choice, when it comes to payments. So this is one additional option that we would provide if everyone agrees at some point on something with the digital euro. Second thing, that being said, there is fragmentation in Europe. We have national offers, national services when it comes to private payment solutions that can have deep penetration on the market, but they are not necessarily going cross-border. And as I said a little bit earlier, there are key characteristics of what a digital euro could be that could be appealing to not only the consumers, but also to the merchants and to the banks. And getting back to this maybe, and trying to at the same time answer, but not really in a controversial way, but trying to answer and complement actually what the panelists said. We are trying to think of a digital euro that would insert itself in the payment ecosystem. So having those three characteristics I talked about, being free, being highly private, being widely accepted, but inserting itself within the payment ecosystem, that means reusing the rails. The rails are not something that we would invent, that would take us 20 years to do so. The rails that we have today, when it comes to a payment card, when it comes to a digital solution, are there. We can reuse that. We can reuse standards and protocols. That's really important to have in mind. When it comes to privacy, which is something for consumers, we have chosen a bad name when it comes to offline. That name is not exactly what we mean, and I think we need to clarify that. The so-called offline functionality will not be only available when you are, next to someone, when I'm next to Rod, Peter, or Katrin, and I want to give you some money. It will be also activated and be activable when we are online. So that means it's an offline mechanism, but that has nothing to do with internet connection or whatever. Now, what we have to prove and what we have to work on in the next 2 years at least is how we can ensure that actually the data that we are putting in the system here are indeed not exploitable by the intermediaries or by the central bank. And that is something that has been highlighted. And we have indeed cryptographic techniques that can be put in place to ensure that we have that offline mechanism, even in remote scenarios when we buy something on a website somewhere. And of course, when we are peer-to-peer next to each other. So really bringing that privacy considerations that we have with banknotes to the digital space. That's something really important to have in mind. I said it, but for the merchants, it's going to be all about the business model. At the end of the day, that's what will drive adoption for the merchants. I won't expand too much on that. Maybe there are questions on this. Let me just maybe focus 1 second, actually a little bit more, 30 seconds on banks. For the banks, obviously they have key open questions, the impacts on deposit flows. And we want to be reassuring there. First of all, that threshold of 3,000 euros has not been decided. That's something that has been put up in the air, but that is the object and subject of debates. And
now there's discussion about lowering it actually, right?
Absolutely, absolutely. To be honest, at the central bank, and even personally, I think we should be more progressive with this, and we should probably think about something lower to introduce, the digital euro. Let me not talk about numbers here, because that's always triggering a lot of discussions for not too many things. But what we are doing right now is we are studying the impacts on deposit outflows. We are doing some granular studies here at the Central Bank, the Banque de France, but also, as part of the SSM, with the Eurosystem, within the Eurosystem, to see in a granular way, depending on bank profiles, some having, different types of, public customers. We want to see, the impacts on liquidity ratios, LCR, NSFR, for example, and to see if the refinancing capabilities of the banks are still ensured over time. So both in a static and dynamic manner, very detailed, but we need to do that work, and we need to also confront that work to the views of the banks, of the commercial banks. So that's something really to keep in mind. We don't want to destabilize, the banks, the commercial banks. At the same time, we are convinced, I'm finishing with that the two-tier system here with a digital euro, in the form we are thinking about it today, we can ensure also that maximum privacy. And we have to. I have to say, and that's a personal view, if we can't convince everyone, really everyone, that we have a private solution here, backed by central banks, then indeed we lose something with the digital euro. And hopefully that's going to be doable. I think we have good, today, analytical, detailed architecture designs that can show that, and that, we can basically show it, to everyone.
Thanks, Peter. So we heard about the outsourcing of operations to the commercial banks for the project. We just discussed the privacy implications or not of that. More generally, it seems like a very difficult strategy to outsource these operations to banks if the banks are the ones that could potentially lose out from this whole thing, right, in terms of financing and costs of funding. I mean, what about the incentive constraints here? Isn't that an issue?
Indeed. So the problem for banks is they have to open the accounts, to manage the accounts, and they don't get any money for it. Yeah, so that's a little bit strange, and so it's like if you have you can say euro croissants is something each European citizen should get free of charge, and you have the bakery, and they have their standard accounts, standard croissants, and then they have the euro croissants, and the euro croissants nobody has to pay for them. But the same logic, because the business of banks is to open and to manage accounts, and now there comes the ECB and says, well, you have to have these free of charge euro accounts which compete with your own accounts. So I think it's a very strange idea, and of course the result will be that the demand for the digital euro will be low, because the customers have only contact with the banks. And if the banks are not convinced, they will tell the customer, you want to open the euro account? I think that's not a good idea. You don't get any interest on it, and well, everything's not. So from a marketing perspective, you must rely on the banks, and for the banks, there is no incentive at all, because in addition, of course, they have all the costs, and of course, if the customer says, yes, I transfer money from my account to the digital euro account, the bank has a loss of cheap refinancing. They have to refinance it at a central bank, which is more costly. So for the banks, there is no incentive whatsoever. And so I'm wondering how the ECB is designing such a system without taking into account what the banks do. But let me say something about the fragmentation of the payment system in Europe. This is true, but for the digital euro, you also need a private payment system. And if you say because, as I said, the ECB does not want to provide the payment services. They don't, and I think it wouldn't be a good idea to have such a public institution running a private payment system. But the ECB doesn't want to do it, so you need an integrated European payment system anyway. Yeah? So if you don't get it, and therefore, if you say we can't get the private systems integrated, it will also not work for the digital euro. And it's not true that you can use existing rails for the settling of digital euro balances. You cannot use target. So you have to construct a completely new settlement system with the central bank, which is costly, and especially if you have 50 cents and one euro, you have all these tiny target. You have the large balances, and with the digital euro, you have 1 euro, €3, and you have a multitude of accounts, so it must be a very mighty system to deal with all that. So it's not true that you can use the existing infrastructures and privacy. What is important, Google, for instance, can open up digital euro accounts in Europe. And so we have the platforms, you have to get all the information. So it's not about, and of course people will never believe you. That's in addition. So you can tell what you want to tell. People will never believe that a payment system organized by the government is providing anonymity. So they will never believe it.
We need to clarify things.
Let me combine your answer with maybe the answer to some other questions later on. Let me first get to Katrin and ask about interest rate policy. The project foresees 0 interest on digital euro holdings. Now, why is this? Everything pays interest except cash. Banks actually get paid a lot of interest right now on their central bank holdings. The Friedman rule calls for interest on means of payment. Why is it the optimal strategy not to pay interest on a digital euro account?
Well, I agree with you that from an economic perspective, there are a lot of arguments why a digital euro could bear interest. So for cash, of course, we don't have interest because it's technologically impractical. So, but for an account-based digital euro, it would be feasible. For an offline digital euro, it would be less feasible because, yes, for collecting interest, you would need to connect to the system to know at which time which balances were on this offline device. So for an offline digital euro, it's much less feasible to have it interest-bearing. So, but for now, I would consider this kind of a moot question because we have the legislative proposal from the European Commission, which foresees that the digital euro will not bear interest initially. So, however, looking at the principle of central bank independence, which is enshrined in the treaties, it's also clear that the euro system should be able to decide on the remuneration of its liabilities. So, for now, there's also no provision that central bank cannot pay interest on cash. So it's just practically infeasible, so therefore we don't have interest on cash. But with the digital euro, it would be practically feasible. So at the moment, I think the question is open. I think for public acceptance at the moment, it's probably a reasonable way forward to say initially it will not bear interest, and we start experimenting because it is an experiment. It's a completely new product. We will have to think about a lot of different questions, options, and I think the discussion on the panel shows that there are very different views and there need to be ongoing discussion with stakeholders, with interest rate groups and so on. But for now, initially the digital euro will likely not bear interest. But I think over time also attitudes there may change. And in fact, there are prominent voices, not only you, but also Andy Haldane, for example, who have argued for digital central bank currency to bear interest, to also give interest payments to consumers.
So let me check with the audience whether we already have questions. So we have quite a few. So then I would suggest that we delay the other questions that I have on my list, and we start moving to the audience with Jean. And I don't know, do we have a microphone for, or maybe you can just speak loudly? Oh, there are. Okay, so Jean-Pierre, please.
So just for information, you have microphones in the armrests of your seats.
Oh, thank you. So it seems we are still in a phase where strategic choices are made, and therefore we can sort of speak freely. I think the discussion shows that the case for the digital euro as a medium of exchange or an instrument of payment is extremely weak. And therefore, the choice which is made to specialize it as a medium of exchange with a ceiling of 3,000 euros, which we heard is going to be lowered, is going to lead to an impasse. And that choice is made because we don't want the ECB, the euro system doesn't want to destabilize the banking system. And I think all the arguments which have been made against the digital euro as bringing efficiency in payments are very weak, and the discussion of the panel showed it. So I would argue that it's time for the euro system to really think very hard of what they want to be. I believe in the anchor function of the digital euro. I believe it's very important that we have it for all the good reasons which have been said. There is a speech by Panetta which has been published this morning, which spells out very, very clearly. But I'm afraid the euro system is putting itself into an impasse by specializing the digital euro on an area where it has no comparative advantage. So they should really rethink their whole relationship with the banking system, find a new covenant with the banks, and expand the role of the digital euro well beyond an instrument of payments. Thank you.
Do you want the response, or this was a question or more like a statement?
There was an opinion, sorry.
Okay. Who
I
has a question?
can respond, Dirk. I can respond and then maybe address some of Peter's points, because we need to clarify
Very
things.
briefly, please.
Very briefly. But I agree that this is an open debate, honestly. So, I mean, we need to listen to everyone and to tweak also. And that's something that we are committed to tweak the proposal. Again, here, the Eurosystem, the central banks were to support the public debate which is going on. Let me just clarify a couple of things I heard, because that is important to say what it is and what it is not. Actually, there will be incentives for banks. Saying that the instrument will be free for the consumers doesn't mean that there isn't a remuneration mechanism and business model for actually the intermediaries. Merchants will have fees on the digital euro. A cut of those fees will go to the bank, which is having the holder of the digital euro wallet. That's a typical four-corner model. One thing. So incentives will be there. When it comes to reusing rails, let me be more precise there, because you're right, it's a key question. For sure, from a back-end infrastructure point of view, for central banks, we need to do things. And we need to provide something different from what we have today. That will be integrated, so there will be a central liquidity mechanism, as you have today in the target services, but there will be a pot, basically, for the digital euro. Now, when I talked about integrating within the payment rails, I was more, let's say, closer to actually the end user, the merchants, and the banks. Today, when you connect a payment terminal to an acquiring bank, you have protocols and standards there. The digital euro will go through the existing standards and protocols which are there. So this is the type of integration within the existing payment rails we need to think about. And that's it. Thank you.
Vitor, we had a question, I think, from you.
Yeah, thank you. Well, the question is related directly to the non-payment of interest, which I think it's absolutely unavoidable, because the logistics of doing that and then having that as a permanent loss for the central bank, because central bank does not distribute credit, and that's how the banks, of course, have a return and pay for the deposits. The central bank could not do that. So it's non-interest payment. That's unavoidable in my view. I don't see how it can be otherwise. That would be the question. But I just want, as a comment, to say that I don't see in all the arguments that were provided a real case for the central bank digital euro. Because the central banks are in the bind in this respect. They don't want to upend the banking system, fortunately. They don't want to do it, which means that they will pay no interest, they will use a two-tier system, and they will have even some limits, or not. Even the limits are not the important point here, is the interest and the two-tier system. And of course, why should I have another wallet, another account to make my payments that I have been doing for 20 years digitally without any inefficiency, without any problem, and so on? I will not have it. And most people, there is no demand for that, really. And we see that even, say, in the pilot experiment in Sweden, where several banks did not join the system because it was voluntary, and so they didn't join because they don't see the incentive, and there is not enough demand from the public. And I agree also with the argument that the public will never believe that something that goes via the central bank can be more private than what exists now. So these indeed are the alternative. It's not viable because it would upend the financial system. Would be for the central bank really to get deposits in its balance sheet, to pay or not to pay the interest, and organize everything which is unviable and would upend the financial system, and no one wants that. So why? In developed countries, where we have had for decades efficient private payment systems, there is no demand for a new thing like that, with those limitations, with those problems. In emerging countries, where there aren't perhaps efficient private systems, yes, the central bank can have a contribution to improve the payment systems, but not in our advanced economies, in my view.
Just to make sure I understand the point, you said the central bank wouldn't be able to afford paying interest, but it of course depends on how they invest on the asset side, right?
I know, but
so that's
it's
totally
really,
up.
I know,
But
but
maybe
really
anybody who wants to
Of
respond
course,
to that?
so we see that deposits at banks also pay interest that is at a spread to policy rates. So this is not to say that the digital euro would pay interest at the policy rate or deposit facility rate. Second, the central bank would continue to interact with the banks, so not with the single consumer. So this would make interest payments in principle feasible. So it would transfer an amount of interest on the accumulated balances of a bank, which then distributed to their customers. But again, it's a moot question, because for now the decision was to have no interest on the digital euro. But I think from a Friedman rule perspective, a welfare perspective, there are economic arguments that means of payment should have zero opportunity cost, and therefore interest would be warranted. But I think it's a theoretical argument which also doesn't fit in with these holding caps, which are also not in the strictly theoretical sense welfare enhancing, but which what I would argue are necessary, especially at the start of the project, because it's a new project, we don't know. So half of the people say it will fail miserably, half of the people say it will be too successful, so the truth may be somewhere in between. And in that scenario, of course, it's very helpful to have these holding limits, because they give kind of a safety valve to not have excessive migration from deposits, creating financial instability and so on. So overall, we need to learn, we need to develop, and I think the elements that will contribute to a project that makes the euro fit for the future are in place.
Peter, I think you wanted to add to that?
Yeah. Well, with the interest rates, I think this could fuel the perception that the digital euro is made as an instrument to abolish cash and then to introduce negative interest rates. So I think that would be under populist approaches. That's a danger, that people say now they want negative interest rates. But you said there is this kind of paradox that some people say it is not successful and some people say it's too successful. That can be easily explained, because of course if you have no limits on digital euro, there would be people with very large holdings of bank accounts which are not protected by the deposit insurance. They would be interested in digital euro for very large amounts of money, but not as a means of payment, but as a store of value. And so that's very easy to explain, this kind of paradox thing that some people say it will be too successful and others say it will be not successful. It will be not successful as a means of payment. It could be very successful as a store of value for very high amounts.
And the people who say it could be too successful probably are the people who fear the most that it could be successful, right? There's a question over here.
Thanks. Piercarlo Paolo, UniCredit, so it's a private sector, but I'm speaking on a personal basis. I must confess that I remain unconvinced the fact that it's really a good project, to be very frank. However, let me give you another opportunity. Can I just put a simple question on the table, which is the following. We all know that as we stand, banking union is not moving. And it's not moving for a number of reasons which are very practical, including ring fencing at the national level. So my question is, if we had the digital today, would that help overcome the banking union problem and ring fencing?
Who wants to take that question?
I'm not sure this is, one of the key drivers, to be honest. Probably, it's part of the equation, but I'm not sure. I would not rate, a specific percentage in terms of, how it could help with the banking union. No, I would not go there, let's say.
Patrick, please.
Yeah, I started with fairly enthusiastic about this idea of digital, particularly when Meta, Facebook people were starting up. So, you got to outflank them, and that worked. So the project had a big success at the beginning. Now I'm not so sure. We're maybe 3 years. We've been asking. We've all been asking. I'm not saying us versus ECB or us versus central banks. All asking the same questions. Some questions easy to answer. I think the business of destabilizing the banking system can be controlled, but some of them not so easy to answer, as we've heard today from both sides. Denmark has said definitely not. Sweden have pushed it onto the back burner, even though these are the countries which are hardly using fiscal cash. The countries that started them up, Nigeria, Bahamas, it's a joke. China, I'm not sure that it's making any progress there either. Is this, remember the Dilbert cartoon, the doomed project? After 3 years, if we can't get answers to these questions, is this not looking like the doomed project?
So let me add that the Denmark thing, actually, they reverted, right? They are now much more open to it than they were 3 or 4 years ago, I think. But the question stands, is this a Nash equilibrium where everybody is just doing it because China is doing it or everybody else is doing it?
Well, I think probably of course, you're absolutely right that the Libra project was kind of a wake-up call. And Libra didn't take place, but I think developments are ongoing. And of course, you can try to regulate it away, but I would question whether this is the most effective answer to such developments. So technology is developing. There are a lot of technical experimentation going on with blockchains, with settlement, with a lot of things. We now have instant settlement in Target, so the technology is moving really fast. And I think it's good that the central bank is thinking about these issues. We have this legislative proposal where also legal tender across the euro area is harmonized, where we think about whether the central bank can issue digital money directly to consumers. These things will take time. So I don't know when it will be passed by Parliament. So I think it's really looking at the technology development and how fast it is proceeding and how fast people are changing their payment habits, especially since the pandemic. I think it's really dearly needed that central banks are looking at digital options and are discussing these questions to be prepared when the tide change.
Rod, you wanted to, I think.
Yeah, I just wanted to respond to some of the general comments from the audience. So I do agree that this case for the digital euro may seem weak on some levels, and I think the points that Peter raised are valid points. And I think this is partly a result of the process. So in designing something like a digital euro, there's a lot of different constraints that are imposed by many different agencies. And this tends to result in a project that is as least disruptive as possible. And if it's least disruptive as possible, then it's unlikely to be effective. So I think that what needs to be done for this to work is, in some sense, for the ECB to be bolder. It has to take a more active role in how it's designed. As I said, one of the areas where it could make real benefits is in privacy. Alexandre mentioned that it's going to preserve the privacy, but it gives no more privacy than currently exists with commercial payment mechanisms. It's still operated by the payment service provider, still sees the data. Granted, that data is anonymized when it goes to the central bank. So unless it somehow solves this problem that I mentioned earlier, this idea that there's this eroding privacy. See, the problem isn't the disappearance of cash. The problem is the disappearance of privacy that comes from the fact that all payments are digital, or not all payments, but so many payments are digital. So from my perspective, the digital euro could be a very valuable asset in society if it could solve that privacy problem, but that's a difficult thing to do while still maintaining the usual safeguards.
Agnes.
Thank you. I think we cannot discuss the pros and cons of digital euro or digital currencies, central bank currencies, without a clear view of the counterfactual. So I would like to ask the panel to describe, without a digital euro, how they see the payment system in 10 years from now, what will be the role of banks, of fintechs, of big techs, of cash, so what is the alternative? Because we are discussing implicitly as if the current status quo would prevail in 10 years from now, and I'm not sure about that.
So this sounds like the perfect question for the last round of answers. And please add to your answers a 5-second statement of whether you believe that the digital euro as currently envisioned will take off.
That's for me the key question, actually, because the trends we are seeing will just be confirmed. So the use of cash will just carry on declining. Maybe there is some kind of bottom line, but anyway, that will be the case. We will see more and more initiatives coming from big techs and fintechs when it comes to digital private currencies. We've seen PayPal, for example, this summer. That's not the last. We know that Apple, with Apple Pay, will go in 5 years' time, in 10 years' time, without the banks, because they don't need the banks anymore. So that's exactly the trend we are seeing. So without something from the central banks and or the public authorities, actually, we would end up with potentially no more anchor and trust with this currency and with the money that we issue. That's, I think, the trends that we are seeing, and that's why having the digital euro debate, even if we need to change, to adapt, to do more a little bit, I think I fully agree with you, and I said it, it's a key question on privacy, we need to do more there. But without having that debate, those trends would just be highlighted even more and will accelerate actually in the 10 years
Will it take off, yes or no? Sorry? Will it take off, yes or no?
The digital euro? Yes. I think, if the public debate is positive, and everyone sees a little bit of the incentive they have, again, merchants, banks, consumers,
so it
and
might,
others.
If it might. Okay.
Yes, because
Rod,
we have to
what do you
design
think?
this properly. Yeah.
No, I do think it will. I don't know if take off is the word, but I do think it will come into play, and then we'll see. I think, just quickly, there was a comment about the idea of whether or not countries are pursuing CBDC just because all the other countries are pursuing it. And that may be true in some countries, but I think the euro area is special. Some of the arguments for introducing a CBDC in developed countries with a fully functioning financial or payment system may be weaker, but we have many different countries in the euro area, and I can see potential benefits to having a digital euro to help, strengthen that currency zone.
Peter, what is the counterfactual and will it take off?
Well, the counterfactual is a retail payment system for the euro area as you have it in other major areas. So a credit-based payment system where you don't need the credit card providers, like Twint in Switzerland, like PIX in Brazil, like the systems in India and everywhere else. So you need payment systems where you don't need the US platforms. I think that based on QR codes, and that works nicely everywhere. The technology is well known, and that's exactly what the European Payments Union is trying to do. And I think that's a very sensible system, and it was successful in so many other countries. And so I hope that Europe will be able to overcome this fragmentation. But if it does not overcome the fragmentation, there is no payment system for the digital euro either. So, it's connected. And just one word on Libra and private currencies. Libra was a flop. Why? Because it was a payment system where they had the feeling you need to have Libra deposits in order to use a system. And of course, that was flawed. Look at PayPal, a good payment system doesn't care about the objects that are used in the system. And so Libra was flawed. And of course, private currencies will also flop because currencies are like languages. And nobody wants to talk in a kind of Esperanto language. That was the idea of Libra with its own currency unit. And so I think that's not something that we will see in the future.
Katrin, what's the counterfactual and will it take off?
Yeah, I think if you look at the history of central banking, so technology has evolved. So some 100 years ago, people had gold coins, and then they went to a gold-backed currency, then the pure fiat currency. So I think going to digital is a reasonable step for the development, to deal with the development of payments and of the economy. So I think the digital euro will come into place, maybe not in 2 years, but I think in going forward at a longer horizon, I'm pretty sure that central banks will go digital because they also adapted to changing payment habits in the past.
Thank you very much to the panelists and thank you very much for coming.